So the jobs numbers were released for January, and that gives me a chance to talk about something I don't get to talk about that often, and that's the economy. And the U.S. economy added a massive 353,000 jobs in January, far exceeding the expectations of only adding 180,000. And this is surprising because often we see January have lackluster numbers because many of those temporary holiday jobs get turned off. This is a really healthy economy. In December, the jobs were revised upwards to 333,000. 2 months of massive job numbers during a time when we probably would see a decline in job numbers. Plus, we're seeing the S&P hit new highs. Inflation-adjusted gas is down 22%. We discovered the largest lithium mine in the world in California. Wage growth is outpacing inflation by 1.1%. The U.S. is becoming energy independent. They're decoupling from China and shoring up banking processes. There is no stopping the United States and its economy for the foreseeable future. Meanwhile, Russia has reduced gasoline exports to, quote, compensate for unplanned repairs at refineries. But we all know what's taking place. It's the Ukrainians are blowing them up. The Russian Ministry of Energy has said that its gasoline and diesel exports have been reduced in January by 37% and 23% respectively. Meanwhile, the unemployment rate in Russia has hit a record low, but there's a reason for that. There's a lot of job openings when you keep getting all your people killed and sending them to the front line. Moscow is throwing fiscal resources at the defense sector through increased military production. Other sectors, though, are suffering mightily. Their IT sector, their manufacturing sector, and the non-military realm. Russia needs more skilled workers, managers, and high-quality engineers to reach the desired level of technological sovereignty in manufacturing industries, and this is according to Maxim Oreshkin, who is Putin's own economic advisor. But their engineers and their managers have bailed on the country because they don't want to deal with the authoritarianism, the war, etc., or they've been sent to the war itself, or they're now focused on military production, which can temporarily boost the Russian economy, but will be detrimental in the long term, all while sanction-driven inflation rages at 8 to 10% in Russia. Now, pivoting to China, China recently reported a significant reduction in its high youth unemployment rate, which ostensibly should be good. They claimed that nearly 1/3 of that unemployment rate decreased from previous highs. However, this announcement came after a 6-month pause in data releases, so we don't know what actually happened in the last 6 months, and this has sparked skepticism amongst a lot of economists and observers. Critics are arguing that the Chinese government is revising its methodology for calculating unemployment to primarily serve the CCP and mask deeper systemic issues, which is something China has done a lot recently. They've shifted the way they calculate their GDP to hide a lot of bad news there. We're seeing this with their real estate market, and where China over the past 2 years has tried to mask its insolvency. But nonetheless, this insolvency is coming, and it may already be here. A court in Hong Kong has mandated the dissolution of Evergrande Group, which is China's largest and most heavily indebted property developer. This follows its failure to manage a restructuring of $300 billion in debt it owes to investors. So those investors likely aren't going to see that money, at least in the near term. Now, Evergrande was once at the pinnacle of success just 6 years ago. It had capitalized on the pre-sale of apartments to middle and high-income groups in China. So they would just sell the thought of building an apartment. The pre-sale, they never even had to build the apartment. There was no asset physically for them to sell. They would just sell the promise. And obviously those promises weren't coming to fruition. By 2018, it had earned the title of the world's most valuable real estate company. However, in just 3 years, the company found itself in dire financial straits. It had excessive debt and was unable to finalize several of those promised projects. Evergrande emerged as a symbol of the challenges facing the Chinese economy, including decelerated growth, rising debt levels, and a diminishing workforce, their demographics coming to bite them, just like Russia's. Investment in China's property and infrastructure sectors represented a significant portion of the country's GDP, accounting for approximately 30% annually. What is even more concerning is the aftermath of this Evergrande sale for Chinese households is that 70% of their wealth is in real estate, specifically apartment complexes like the one Evergrande could not finish. Beijing has come to recognize that an export-led economy on the scale that China has built in recent decades cannot go on forever, and it is trying to promote a more domestic consumption-backed economy to take up some of that slack. This sharp downturn in real estate is causing a spending crisis in China, where China is trying to pivot to a more US-like consumer-driven economy. But no one in China wants to spend, since they're seeing massive swaths of their investments and retirement in real estate evaporate. Meanwhile, unfortunately, Europe's economy remained stagnant at the end of 2023, continuing a trend of lackluster performance for over a year, influenced by high energy prices, increasing credit losses, and a decline in Germany's economic performance. And Germany makes up a significant portion of the European economy. According to Eurostat, the economy showed zero growth in the last quarter of 2023, following a 0.1% contraction the previous quarter. This stagnation marks a significant downturn from the 0.5% growth observed in the third quarter of 2022, and even 0.5% is pretty lackluster. The outlook for the start of the new year is not very promising either. Business activity indicators pointing towards further contractions. Additionally, disruptions in the Red Sea have affected global trade through the Suez Canal, leading to higher shipping costs and potential inflationary pressures in Europe. The U.S. does not rely on shipping costs through the Red Sea nearly as much as Europe does, because the U.S. is integrated in the Western Hemisphere, with much of their economic output taking place there, and anything coming and going to China is crossing the Pacific. And this is leading to the U.S. growing by 3.3% in the final months of 2023, which was much better than expected. So when you look at Russia and China and Europe, frankly, all seem to be struggling economically, you have to wonder where this wealth is going. Well, I'll let Nintendo's Kirby demonstrate.